Time value of money. Friends, in this session we'll understand what is time value of money. First of all, whether the money has time value. For understanding that, we'll take an example. Let's say I'm going to give you 1000 now, and I'm also telling you instead of 1000 now, I'll give you 1000 1 year later. Now, for which 1000 you will be giving preference? Is it 1000 now or is it 1000 after 1 year? Obviously, your preference would be for 1000 now for reasons like if I give you this 1000, you can consume it immediately instead of waiting for 1 year, or you can use it for investing somewhere else so that it will generate revenue for you, or this 1000 is going to give you more purchasing power which you can purchase now at 1000 rupees. Probably you may not be able to purchase the same product for 1000 rupees after 1 year. So the money which is in your hand now will have more weightage than the same level of money which you are going to get after 1 year. And again, if I tell you that I'll give you after 1 year, again there is two elements involved in that. One is risk. There is an uncertainty that whether I'll pay you or not, number one. And number two, the 1000 what you will get after 1 year will have less value than what you are having now. Simple example is a product which can be purchased for 1000 rupees will not be sold for the same 1000 rupees after 1 year. Probably it will be sold for 1100 rupees. So next year if you receive the 1000, it will have less purchasing power for the same product. So that is the time value of money. So we'll understand even in a better way. Let's say I'm going to give you 1000 now and you deposit that for a period of 1 year. Say it's going to give you interest at 10%. So this 1000 will earn 10% for 1 year and it's going to be 100. So at the end of 1 year you will have 1000 plus 100, 1100. So it is for this reason I said 1000 what you have now is not equal to 1000 1 year later, because this 1000 can become 1100 without any difficulty. So you cannot compare 1000 now with 1000 1 year later. So to understand the time value of money, there are four ways. One is to understand what is the future value of the single amount. Two, what is the future value of annuity? What is the future value of annuity? If you're going to have a regular cash flows in future, okay, then you can calculate the future value of it. We'll see that in later stage. And you can also know the present value of single amount. I mean, what you are going to get in future, what is its present value? Had it been received today, what will be the value? Similarly, the present value of annuity, if you are going to have a regular cash flows in future, what is the present value? So in this way, we'll study the time value of money concept in the subsequent sessions.